The oil price fell a bit over the weekend, and the latest talks between Greece and its creditors broke down acrimoniously yesterday. But that's not why the Australian share market fell today. It happened for a surprising but fairly logical reason. From tonight, Saudi Arabia is opening up its share market to big foreign investors. Now, obviously, the Saudi market is all about oil, and global asset managers will now be able to allocate funds to companies that are listed there. And to get ready for that, they seem to have started pulling money out of Australian oil companies. Their allocation to oil will stay roughly the same. They'll just shift some of the money from here to there. So Woodside, Santos and Oil Search, among other energy stocks, all fell by more than 2% today, dragging down the whole market. Medibank Private also fell sharply, while Metcash rallied, despite announcing a loss for the year to April because it also announced the sale of its Autobahn business for $275 million. But back to Saudi Arabia. The Shanghai stock market in China was opened up to foreign investors last November, since when it's doubled. And the Australian market, which is seen globally as partly a proxy for China, has gone precisely nowhere. So now investors are wondering whether the Saudi market will do what China's has done. And speaking of China, by the way, this graph tells you why we care about Chinese property prices, almost as much as we care about ours, and why we want there to be a boom. There's a strong correlation between Chinese real estate and the iron ore price. Why? Because most Australian iron ore goes into making Chinese apartments. The iron ore price fell slightly over the weekend, along with oil and most base metals. The Shanghai index fell slightly today, but the Hong Kong index fell more than 1%. And the Australian dollar was broadly flat today at just above 77 US cents. And that's finance.